Uh, Good morning. Okay. This is Ise, and we are here again discussing price action for those that missed the Zoom class. So, like we did on the class, I will be so fast here. And by God's grace, I'm going to talk about two things. I'll be talking about the price action and the Fibonacci level. I think I did not finish it on my previous my previous class. So let us just get on with it right now, and we should be fine. Okay. For the first thing I'm spotting here, you can call this thing two things. You can call it either a block order or a block order because of its reaction around this area. You can call it a block order because of its reaction, but if you want to neglect that, you can call it it's actually a failed bearish trend. It's a failed bearish pin knot, because this is a pin knot. A pin knot. This is a pin knot, and it's a failed one. It's actually a failed one. And like I used to say to us, when the market breaks out here, it retests back. When it breaks out here, it retests back around this place. So that's the first thing I'm spotting, and I can easily spot it because I have prepared my mind to come into the market and see things easily. So okay, let me start from this place. And where did we start? Okay, let me just start anyway. Now, like I said the other day, I said that when you have these particular areas, they are resistance levels. Why? Sorry. The network is making this area our resistance level, and when markets get to that area on a minor trend, they do what they respected that level, and they have to bounce back. So, and when markets moves out of that level, that means it has broken that point, and the initial trend tends to change. Just like I said some seconds ago, these are resistance levels, and also this is a support level. When market gets to this area, they tend to respect that particular region and do what, and they bounce back from the market. So I'm going to okay, I am talking about price action presently, and I think I'm going to use additional 10 minutes to quickly brief this thing and be away with it. So these are support level. This is a support level, and market is reacting to the action. And when market breaks out of this level, what happens? it retests back, then the trend begins to go. And when it retests back, this particular area immediately becomes a new resistance level. This particular area, this is a retest point for this particular area. It becomes a new resistance level, and any market that comes to this area again will tend to respect that particular area and do what, and reverse back. And when any market decide to break that region, then it will retest back. It's either it retests and fail, or it retests and move away from that area for the rest of some periods in the market. I can also note something around there. I can see a block order again in this area, and if you look at it very well, sorry, I want to zoom in so that we all see what I'm trying to talk about. Okay, good. You see a block order here. This is a ranging market. You can either trade this thing in two ways. In two ways. You either trade it using my strategy, the one I told you guys in the class, by counting the zigzag level, which say this is 1, this is 2, this is 3, this is 4, this is 5. Then you take this point 6. You either place your trade here, or you wait for breakout around this place. And when market breaks out of this region, it retests back to that particular area before it moved to the previous weak or strong resistance. And when it gets to that area, which was our initial retest point for previous breakout of a double top. Now let me talk about another pattern here. Like I said to us some days or the earliest stage of our class, that this place, I can call this elimination. I don't have time to be discussing the candle here now, but I will call it elimination because it fails. It's actually trying to break this region before it found a resistance. Then it bounces back to after I said, and every retest point becomes either a support or resistance. Now, as we can see here, our breaking out of this block order becomes a support level. It becomes a support level, and when market got there, what happens? They tend to react to the area, and the market moves up respecting this particular support level. And when they got here, they broke it finally breaks this resistance level. And what happened? This is the retest. It retests here, and finally breaks that region for a minor trend. And also, as it has retested this particular area, let me quickly do something. Okay, this particular area, it becomes either a strong or weak support level. So any market that is coming to this place tends to react to it, and you can see it's a simultaneous thing. It's a very simultaneous thing. Either when market get there, they bounce back, or they breaks out of the region. You are looking for two opportunity. Either you, when market reacts to it to move up, you buy, and when market breaks out of that region, what do? You sell. And immediately when markets broke out of this place, the retail sale was not in a very obvious way, but it actually happened. And when it happens, what do you call it again? It becomes new resistance level, new resistance level. And when market gets the end market that either comes down or comes up from this region, you take the advantage of what? Of buying or selling. When market broke out of this place, it retests and come down. If I'm to draw again now, I'll be seeing that my market is respecting a particular support, which is happening here. It's not, there is no magic in this thing. What you need to do is to wait for your time to enter the market. Don't just enter the market anyhow. Just, the goal is to make money. And if I'm to draw it again, you see that wow, definitely going to make money throughout the whole of our life in the forex market, doing the right thing. So market breaks out of this place, it returns back, and as it has returned back, this area becomes what? Our new resistance level, our new tradable resistance level, which by God's grace is going to be something in the future. I'm following because I just want us to take every advantage of the market and just utilize it to be fine. Now, so this is another double top. You don't have to wait you don't have to lose your money. Just place every trade as you are spotting the chart patterns. Now, yeah, I don't take any market for granted. I place all my order spotting every chart pattern. This area, if I'm to draw it now, this is a bullish peanut, and when it breaks out around here, it retests this particular candle. Now, on the breaking out of this region, I'll just place it here. I know it's already it's actually, I have spoken about candles. I don't need to be talking about some things around here again to save my stress and time. And when it breaks out, it returns back around here. I actually think, okay, let me draw the trend line that got this area to be like this. It's not a magic. Something happened to that place before it can happen. This was what happened. Yes, I'm very right. So market broke out of the region around here, and it went up, then returns back to that particular line. Since it failed to fail that what should I call it? It fails to break this line again, then the market is going to buy. Another thing I'm spotting here is so as like tonight's class, I told us about some particular pattern, which is what is happening around here. After the bearish pin out, the next possible pattern you should be looking at. Okay, I told us the inverse of it, but in this place, this is the right way of it now. And after breaking out, what happened to the market? The market started moving up, and we anticipate this area to be our new golden treasure to pick another glorious trade in the future. I can place my trade in edging, and I can also place my trade in what. This is my new this is my new golden treasure here, because I know for sure when market gets to this area, it's going to what. When market gets to this particular area, it's going to what. It's going to buy. When market gets to this area, is actually going to buy. And again, I'm spotting something new here, which is called I can call it a falling flag. And in a falling flag, what do you expect in the market? You expect the market to buy when the liquidity grab is achieved. You expect the buy to happen, and what do? You just take the advantage when it happens, and you'll be fine by God's grace. You'll be fine by God's grace, and no matter what is happening in the market. Now I'm spotting another thing in the market, which is very, very, very important for you to know too. This is edge. I spotted HS, which is head and shoulders. So this is previous shoulder, this is head, and this is another shoulder. So since I have my hand here, I'm supposed to have my hand here too, and my hand might get to anywhere. It might get to my my tummy, or my what's it called, my knee, either of the two. So if it's taking the advantage of it getting to my knee, then my golden treasure will be achieved there. And I already placed a sell order. I'm placing hedging trade there. You can see buy and you can see sell at the same time. So when my order gets to this area, it is a must for it to buy, because this whole thing is a falling flag for the market to do what, to pick a liquidity grab, then buy. In fact, the way it will buy that day, I'm going to buy a new car by God's grace. So that is just it. Let me hold on for now, then we move on to the next class of study.